All right, what is up, WTrades community? This is our first ever trading workshop video where I turn you guys from nothing to profitable in 20 singular days. There's going to be a series of videos where I post every single Monday and Friday where I'm going to teach you guys the fundamentals of trading. My goal is to complete the best trading workshop for completely free so you guys can trade on your own and literally learn every single step that is used in the trading industry. This video is going to come with a lot of hidden sauce, a lot of strategies and key components that even the best traders don't even know yet. Very first thing we're going to touch base on in this trading workshop is draw on liquidity. The reason we're starting with draw on liquidity is because you can't go into the market or pre-market before you're trading without a draw on liquidity or a daily bias. So you're probably wondering, how do I find the first draw on liquidity or my draw on liquidity for the day? If you guys are going to understand what I'm about to show you guys are going to have a strong idea in every single trade that you guys take on where the draw on liquidity is. Now you guys might ask, what is liquidity in the market? Just entries, stop points, and orders trying to get filled. Now the real question is, where do most traders place these orders? Well, above highs and lows. So what does that mean particularly to us traders? Well, that means those areas become targets. For our first example, we're going to be using swing highs and swing lows. We can kind of use these swing highs and lows as a magnet for price. We're going to want to see those get hit before we see another move off of it. We take our previous highs. These are huge draws on liquidity because now if we're in a bullish trend, we're looking for price to take these out, do a reaction, and continue back that same direction. You can start by marking out pre-market analysis by going on the higher time frames like the daily, the 4 hour, and the 1 hour, finding these swing highs where price doesn't push higher off of this, and just drawing a line across for your next draws on liquidity. The exact same thing works for the lower time frames as well. 4 hour, 1 hour, 30 minutes. All we're going to be doing is finding this previous lows, previous low, and even previous highs, because now those are going to be our main draws on liquidity. We're waiting for price to rebalance into price. So either take out one of these highs, fill the orders that were filled by those traders, and push down into another key area, which are these lows, basically like a wave. So we're going to be pushing up, filling these orders, pushing down, filling orders, and then pushing back up to the new all-time highs. Now this is where it all clicks. Instead of asking, should I buy or sell in the pre-market analysis, you have to ask yourself, where is price trying to go and where is it trending? You're going to scroll to the highest time frame. Are we bullish or are we bearish? In this case scenario, we are definitely bullish. If we're bullish, price is going to target high liquidity. If we're bearish, price is going to target lower liquidity. Simple as that. For example, if we're trading on April 6th, we're going to be looking for a pullback into key areas of liquidity, which are these lows and this low. Now watch this. After we marked out these highs and lows, where does price pull back? Price pulls back into this low and takes out this area of liquidity. What are we looking for next since we're in a bullish trend? But now you might ask, where is it going to go? Well, if we're in a bullish trend, we take out lower liquidity. Now we're going to be targeting for higher liquidity because it's like a magnet. So we're going to take out the lower and then go back to the higher. So we take out this low, sweep this area of liquidity, fill orders for most traders, and now we're going to go on the lower time frames and we're going to be targeting these highs. And literally, as you can see, once we sweep this liquidity and fill orders, we shoot right up to these next areas of liquidity because these are the previous swing highs. Think of it like this. Liquidity is like a pool system. It's going to pool to the one area of liquidity and then shoot back to the next area of liquidity. So whatever time frame we are, if we're bullish or bearish, we're going to be looking for a bearish move in a bullish market to then a bullish move. If we're in a bearish market, we're going to be looking for a bullish move and to then a bearish move. Most traders lose in this case scenario is because they're trying to short in a market that's bullish. They don't use specifically the higher time frames to find their narrative. They use the lower time frames to see the short narrative of the story and not the full picture. I'm going to cover most of this in a different video, probably right after this, honestly. But if we're trying to find a bullish move off of this sweep and low, or we're going to scroll down to the lower time frames and try to find the entry. As you can tell, this is the low that we had marked out. We perfectly grabbed this area of liquidity, V-shaped recovery, grabbed this low, filled orders here, and now we're pushing back up into the market. So obviously we're not going to be entering on the daily time frame. Lower time frames is where we're going to see the actual moves and where we're going to get our precise entries. If you guys can take one thing from this video, is stop focusing on your entry points but start focusing on where price is going to head to. One more thing that always stuck with me as a trader: trend is your friend. Don't always try to trade against the trend. Find your bullish move or bearish move for the day. Identify where the trend is. Look for the lower time frame or high time frame liquidity sweeps and trade with the trend. Watch for a pullback in either direction. Always trade with the trend. Target areas of liquidity like this. Usually price isn't going to retest it and come back down all the way here if we are bullish. But say if we have our stop loss here, there is a chance that price can go push up, take us out, and then push higher. So always put your stop loss at protected lows, and then always put your take profit at swing highs. This can work on the lower time frames as well: 15-minute, 5-minute, 2-minute, even 1 minute. Thank you guys for tuning in on the first day of the trading workshop, which we covered draw and liquidity. Review this and literally make this your number one priority in trading, because this is going to determine where your executions are and where you're going to be trading for that day. If you can't figure this out, then your trade is going to go terribly wrong for that one session. We're going to be dropping the next video on Friday, which we're going to be probably covering for value gaps. So stick around if you guys want to learn. This is completely free of charge. All you have to do is take the time and put the work in.